Everyone wants to be a successful investor. Everyone dreams of doubling their money, retiring early, or living off dividends. But let's be honest, most people lose money in the stock market. Not because they're unlucky, not because the system is rigged, but because they keep making the same 3 mistakes over and over again. These mistakes quietly destroy wealth. They ruin portfolios, and they turn what could have been financial freedom into financial frustration. So in this video, we're going to uncover the 3 biggest mistakes every stock investor should avoid, especially in 2025. If you can fix just these 3 things, you will already be ahead of 90% of investors out there. Ready? Let's get started. Mistake number 1, investing without a plan. Most people treat the stock market like a casino. They buy random stocks they hear about on the news, follow tips from friends, or invest in whatever is trending on social media. They don't have a plan. They don't know what they are trying to achieve. And because of that, they get lost the moment things get rough. Here's the truth. If you don't have a plan, the market will make one for you, and you are not going to like it. See, successful investors don't just buy stocks, they build strategies. They know their goals. They know their time horizon. They know their risk tolerance. They ask questions like, am I investing for retirement? Am I trying to beat inflation? Do I need this money in 5 years or 20? Because the answer changes everything. A 25-year-old saving for the long term should invest differently than a 60-year-old nearing retirement. Yet most people invest the same way, randomly. They don't set rules. They don't define how much they will invest each month. They don't know when they will sell. And that's a recipe for disaster. Think of it like this. You wouldn't drive across the country without a map. So why invest your life savings without one? The best investors treat their portfolio like a business plan. They set clear goals, diversify across sectors, and stay disciplined no matter what is happening in the headlines. Because when you have the plan, you have control. You stop reacting emotionally. You stop chasing hype. And you start investing with purpose. That's mistake number 1. Investing without a plan. Now, let's move to the second. And this one is even more dangerous. Mistake number 2, letting emotions control your decisions. This is where most investors lose money, not because of bad stocks, but because of bad psychology. Fear and greed. They are the twin killers of wealth. When markets rise, greed whispers in your ear. This stock will keep going up. This time is different. You ignore the risks. You keep buying. And then the crash hits. When markets fall, fear takes over. You panic. You sell at the bottom. You lock in your losses. It's human nature. Our brains are wired to avoid pain. And losing money hurts. But here's the irony. The more emotional you get, the worse your decisions become. Studies show that retail investors underperform the market. Not because they pick bad stocks, but because they buy high and sell low, over and over again. They chase excitement. They panic during corrections. And they forget that volatility is normal. Let me give you an example. During the 2020 pandemic crash, the market dropped over 30% in weeks. Millions of investors sold everything, terrified that it would never recover. But within months, the market bounced back stronger than ever. Those who sold lost big. Those who stayed invested made life-changing gains. That's the power of discipline. Warren Buffett once said, "Be fearful when others are greedy and greedy when others are fearful." But most people do the opposite. They get greedy at the top and fearful at the bottom. So how do you fix this? You train your emotions. You automate your investments. You stick to your plan, especially when it's uncomfortable. Because emotions are temporary, but your long-term goals are permanent. You have to remind yourself, short-term volatility doesn't matter if your horizon is long-term. The stock market isn't a daily report card. It's a long-term wealth engine. And if you can learn to stay calm when others panic, you'll not only protect your money, you will multiply it. That's mistake number 2. Letting emotions dictate your decisions. Now, let's move to the third mistake. The silent wealth killer that most investors never even realize they are making. Mistake number 3. Ignoring the power of time. Everyone knows compounding is powerful, but few people actually use it. They invest for a year or two, expect huge returns, and then give up when it does not happen fast enough. They forget that real wealth doesn't come from timing the market. It comes from time in the market. Think about it. If you invested just $500 a month in an index fund earning 8% a year, you'd have over $750,000 after 30 years. That's the magic of compounding. But here's the problem: most investors don't give compounding enough time to work. They jump in and out. They trade too often. They try to chase quick profits. Every time they sell early, they reset the compounding clock. That's why even small, consistent investors often outperform the big traders. Because consistency beats intensity every time. The earlier you start, the easier it gets. Every dollar you invest today has decades to grow. But the longer you wait, the harder it becomes. Let me share a quick example. If investor A starts at 25 and invests $300 a month for 10 years, then stops completely at 35. By 65, they will still have more money than investor B, who starts at 35 and invests $300 a month for 30 years straight. Why? Because those first 10 years of compounding make all the difference. Time is the most powerful asset you will ever have. And it's the one thing you can't buy back. That's why you should never wait for the perfect time to invest. There isn't one. Markets will always rise and fall. There will always be elections, wars, and recessions. But the sooner you start and the longer you stay, the richer you will become. So don't waste time trying to predict the next dip. Spend time letting your investments grow. That's mistake number 3, ignoring the power of time. Now, let's tie it all together. The biggest difference between amateur investors and successful ones isn't intelligence. It's mindset. Successful investors think long-term. They have a plan. They control their emotions. And they respect time. They understand that wealth isn't built overnight. It's built over time. So if you want to avoid the mistakes that destroy most portfolios, remember these 3 rules. Number 1, always have a plan. Know why you are investing, how long you will invest, and when you will sell. Number 2, control your emotions. The market will test your patience. Don't let fear and greed make decisions for you. And number 3, give your investments time to grow. Compounding only works if you do. Because here's the truth. You don't need to be perfect to be wealthy. You just need to be consistent. The stock market doesn't reward the smartest investors. It rewards the most patient ones. So stop chasing the next hot stock. Stop trying to time the market. Start building habits that last. Set up automatic investments. Diversify your portfolio. Reinvest your dividends. And stay invested no matter what headlines say. Because every day your money stays invested, it's quietly working for you. And years from now, when others wonder how you built your wealth, you'll know the answer. It wasn't luck. It wasn't timing. It was discipline. You avoided the mistakes that destroy most investors. You played the long game, and you won. So ask yourself right now, which of these 3 mistakes are you guilty of? Are you investing without a clear plan? Are emotions driving your buy and sell decisions? Or are you ignoring the power of time, waiting for the right moment that never comes? Whatever your answer, remember, it's never too late to fix it. Start today. Create your plan. Automate your strategy. And commit to staying invested for the long run. Because every smart investor knows, wealth doesn't come from guessing the next move. It comes from avoiding the dumb ones. And if you take only one thing from this video, let it be this. The stock market rewards consistency, not perfection. Discipline beats emotion. And time beats timing. That's how wealth is built. That's how fortunes are made. And that's how you can finally take control of your financial future. So, stay calm, stay patient, and stay invested. Because the biggest mistake is not starting at all.